The Fed just raised interest rates. They're already high enough. What are they thinking? We're going to talk about what they actually did next. Hey there, this is Ryan Skaggs. This is the Mortgage Minute. Thank you so much for tuning in. This channel is dedicated to everything mortgage, real estate, and interest rates. And we're going to talk about those interest rates first. So, the Fed, the Federal Reserve, the FOMC, all these different adjectives, what they just did this week, it is now the beginning of May. They just had their meeting. They raised their Fed funds rate by 0.5%. That's the first time that they've raised it a full 0.5%. Typically, it would always be a quarter since the late 80s. So it has been decades since they've made this big of a swipe at interest rates. And what they're intentionally doing is trying to hold down inflation. Inflation has been going crazy high. And that's also why typically housing prices are following that. So we've seen housing prices so high. So what did the Fed do? They raised their Fed funds rate, where basically banks borrow against each other, by a full 0.5%. They told us that they're going to take 0.75 off the table. So that means they're not going to have to make any of these really, really big increases in the future, which is good. That creates certainty. Certainty lowers volatility and hopefully will stabilize the mortgage market. Where are interest rates today? According to Freddie Mac, and you can check out the link below, we're at 5.27. We've now reached a high over of what we saw in 2018. So we're dating back well prior to kind of financial crisis now in terms of where we're at. That is almost with one full point. So if you're looking for a 30-year fixed without points, you're likely in the mid to high fives now. So that is significant. Again, check out that link below to Freddie Mac. While you're down there, click that like button, click that subscribe, and click that bell icon to be notified as I'm putting out weekly videos on the channel. So the Fed has their meeting every other month. And during that time, it's always coming in on a Wednesday. They always release those minutes in the afternoon. I'm on Central Time, and they're going to give us an understanding of what's going on in the future. One other item that they did for us is that they told us they own all of these mortgages. They've bought all of these mortgage-backed securities, and they're going to be slowly releasing them back into the market. And they gave us a timetable and a schedule for that. Again, that was kind of behind the curtain before. So they gave us more transparency, more clarity. So what does this mean for the market? What is my opinion? I've been doing this for over 10 years. I've definitely seen some ebbs and flows, to say the least, with COVID and financial crisis, back in 08 to 12. So it's been interesting, right, to say the least. So the more clarity that the Fed can provide, the more clarity on what they're doing to combat, these high inflation rates and whatnot, is going to help stabilize the market. I do not see a use case for rates continuing to rise as they have been for the last 8 of 9 weeks. But I also don't see a use case for interest rates to start dropping. And we've already hit this, kind of 2022 high, and that they're going to be going down from here. I'm hoping and I believe that they're likely going to stabilize. Could we see some slightly more increases here through the rest of the year? Slight is my hope and my assumption or hypothesis. So if you're looking to purchase a home, you definitely need to keep an eye on where the average 30-year fix is to help you budget accordingly, right? So again, check out that link below. I've got a ton of other videos on various subjects, everything mortgage related, and it's all in the Mortgage Minute playlist. So thanks so much. Click that subscribe button. I'd be forever grateful, and we'll see each other again very, very soon.